I'm going to show you the top 5 Leap options I am buying in 2025, and I'll explain my whole analysis going into each and every single trade. But before we get into that, it's extremely important to fully understand what Leap options even are, how they work, and how to manage them. Otherwise, you could lose your money and not understand how to actually manage the position from open to managing it to closing it for a profit.
Here's the key advantages of this strategy before I jump into my 5 picks. It's really just these 5. It's leverage, time, less DK in the option, flexibility, and then we'll talk about the leaky bucket as well. First one is leverage, so you get to control expensive stock cheaply. 2 is time, so you have a lot of time on a leap option. You can participate in multiple earnings. You can participate in a long-term trend. And you can participate in multiple catalysts. So a catalyst can be like Fed rate hike or Fed rate cuts, or it's really anything. A catalyst can be a multitude of things. So third is less DK, so theta burns slower than weekly options or monthly options. So a long-term leap option is not going to burn as quickly as those. And then fourth is flexibility, so you can exit early with profits anytime that you want. So this strategy, you can literally get in and then get out within a week, 2 weeks, 1 month, 3 months. You have the full flexibility to do so. So before I go into the fifth one, I want to go over some quick math and give you an example on the screen. Let's say that NVIDIA is trading for $150 per share, and 100 shares would be $15,000. So let's say that we have a leap option. We purchase it for $2,000. Well, $2,000 is like literally 1/7 or even almost like 1/8 of the price of buying 100 shares of stock. So you get to put down very little amounts of capital. And this is perfect for smaller accounts. Now, to give you the time decay leaky bucket explanation, imagine you have a leaky bucket with holes, right? Weekly options, your holes are really huge because that option's going to die in 1 week. So that hole is like massive. You have like a huge hole and just like pouring water out of that bucket, right? A leap option has like a fork-sized 4 holes, like you boom, boom, right? Let's say you go 4 and 4, you have 8 holes in a big bucket. So yes, it's leaking as well, but it's a very slow leak. And that's because theta and time decay affects an option a lot less when that option is very far out into the future. It starts to really accelerate in the last 90 days. And this really matters because the more time you have, well, the more opportunity you have on a leap option. Market volatility actually benefits you when you're buying leap options because if you get a down and then a huge up, I mean, it's just profit, really. It's just profit as long as that option goes up a little bit and volatility increases. It actually helps the option out because options are more valuable when volatility increases. In fact, the option, let's say NVIDIA stays at 150, does nothing, but the market becomes very, very volatile, your option will actually increase in value even if the stock didn't go anywhere. If it didn't go up or down but volatility increased, then your option will actually become more valuable. Alrighty guys, let's get into my first play, which is Palantir. Palantir stock is currently sitting at $156 per share. The last 1 month the stock is basically flat. It's had a really big move upward and then it has come down, which is something that I've actually did very well on because I have a covered call position, but that's a different strategy than this video. I just wanted to say that volatility with options, you can benefit and make money regardless of like the direction. So Palantir has been really good, but in the past month it's flat. In the past 6 months it's up 84%. So of course, a lot of people made money. I think right now is a really good opportunity to purchase a leap option, given how much that Palantir has fallen down. So Palantir, it was not that long ago $186, and now it's down $30. So if you think about it, can Palantir go back up to 186? The answer is obviously clearly yes, it can. We don't know when, but a leap option would help us do that. So let me show you an example of what I would do with Palantir. So we'll go to PLTR here. I'll show you like a leap option example that I would purchase. Now, don't hold me accountable to this because honestly, I'm not doing leap options right now personally because I just have better consistent strategies, and leap options are more so for scaling accounts versus when you already have a bigger account. Right now, I'm not necessarily doing that many leaps. But I do think like if I had capital, I don't have any cash available because in my Discord community right now, we're fully invested. We're doing very well, but we're fully invested. So I don't personally really have a lot of cash to even buy leaps. Of course, if I had cash, I would do a trade like this, but I just wanted to put that out there. I was going to trade Palantir options, and I have a huge Palantir position as you just saw. So I was going to buy call, and we're going to go out for 2026. Of course, we want to have a good amount of time. So let's go for April 17, 2026, and then I'm gonna go for something that's in the money. So keep in mind that Palantir can go back up to like 186, but a lot of these options right here, their break even is actually like 178. So we don't have, this is such an obvious play. This is like, I don't want to call it like easy, but this is a pretty obvious play for many investors. And since, Palantir does have a lot of volatility, these options are not necessarily cheap. So I want you to keep that in mind, that if you hold this option until expiration and then Palantir goes up to 185, you'll make money, but you're only going to make like $6 on your investment of like 40 basically. So you'll have like, that's like 2.5. Like if I multiply 40 by 2.5, that's like 100. What I'm trying to get at is the return is like 12. It's like a 15% return in like a little bit over half a year, which is like not necessarily that great. But the way that you can make this return bigger and nicer in shorter amount of time is if Palantir recovers sooner than April 17. Because of course, like, yeah, April 17 is a little bit out there, but Palantir can go up to like 185, let's say by February or March, right? If it does that, then the option will still have some time on it, right? So if we look here, like theta is a really like an important factor in an option. So it'll still have some time. It'll be very in the money by like, what is it? 185 minus 140 is $45. So it'll be worth at least 45 plus a lot of time value. It'll be like, a $55 option. So then you will make money because you're essentially buying for 39 and then you're selling for 55. So I'll put the math on the screen right now of what that percentage return would be if this were to happen. So you can cut this position like short if you need to. You don't have to hold until expiration. I like Palantir because obviously they run AI software used by the US Army, the CIA, and lots of big governments. So that's really good. And that, like, honestly, nothing pays more than the government. So once you're working with the government, then that's good, right? So they're going to keep getting contracts, and that's why I'm really bullish. But also, like, looking at their commercial growth, it's really speeding up, and it's very fast right now. So they have both government and commercial business doing very well, and they're expanding into private business clients like healthcare and energy. So yeah, I'm just bullish on that. I think that's going to perform very well. They are also an AI operating system play. I think one of the themes in the market right now is investors want to be in companies that have a theme around them, like a long-term trend and theme, and Palantir definitely fits that mold. Q2 2025 revenue was $1 billion, with net income reaching $320 million, and that's projected to continue to increase about 45% year over year. So profitable. With the company is very profitable, with somewhere around $6 billion plus in cash, no debt. So guys, this company has no debt at all, and they're very long-term stable. So the strategy here is that Palantir, and I give you like the conservative numbers, it could be a $190 stock. And if it hits that before April 17, then this position would clearly make somewhere around a 30% return in about 6-month period, which is of course getting into some really big numbers territory. So this is kind of like the option that I would look at, is the 140 leap option for April 17, 2026. All right, the next stock I'm going to talk about is SoFi. So SoFi has had a lot of good growth over the last 1 month. It's up 14%. We've been making money hand over fist on this stock. By the way, I'm a bit sick. That's why I got some throat pain and stuff right now, but I'm pushing through because I want you guys to make a lot of money, especially in this amazing market. And right now it's really good, especially when the market pulls back. It presents an even bigger opportunity for you to make more money. 6 months, the stock has been an absolute monster tear. Of course, they have a bank charter, which is a huge advantage. Their member growth is accelerating. Fintech disruption play. Clearly, they are disrupting the market. And as a disruptor, that's a really big investment opportunity. So I'm very bullish on it. They hold a full U.S. banking license, which is very rare for fintechs, and that's what gives SoFi a really good competitive advantage here. Unlike some other firms, we got Chime, we have Robinhood, some others, right? So SoFi has a really big advantage, and they make money from many different sources, from student loans, from personal loans, from credit cards. They also run Galileo, a tech platform powering other banks, cards, and payments. So I think investors are really waking up to see that this is a really good investment to make. So I personally thought that this is going to be a $30 billion company. I said that at $14 billion. Exactly as I said is exactly what happened. And now looking forward, I think that we can still hit a $50 billion valuation within 12 to 24 months. So pretty reasonable amount of time. And I'm bullish, especially that net revenues are really increasing. So we're not at $1 billion yet, but yeah, we're at $855 million, which is a 43% relative increase to the prior year's period. So the company is just really scaling the revenues. The opportunity is huge, still very relatively affordable. So jumping in with the Leap option, you have a really good setup. I'll go to Robinhood right now, and I'll show you the setup right now that I would be doing on SoFi. So the setup is going to be essentially something very similar to what I showed you on Palantir. We're going to be looking at buying an in-the-money option and benefiting as SoFi goes up. Let's go for an expiration date. That's going to be, we can go for April, we can go for May, we can go for June. Let's go for June. That goes into like next summer of 2026. And I would buy something like a $17 call option here. And look, this looks like amazing because their break even is only $27.70. I mean, SoFi can be $30, $35, $40 stock by next year, and that means that you would have really just massive growth. If it was a $40 stock, you would, the option here would be worth like $23, and it's currently going for $10.75. So you could do the math there. That's just an amazing return. And if you look at the implied volatility, it's very high, and for good reason, because SoFi is a very volatile stock. So that's not a bad thing, because when you're buying a leap option, you want the stock to be volatile. You want it to have a huge increase, and that's a good thing overall. The volume here is 66. The open interest is 7,600. There's a lot of investors betting on this to happen, and the delta here is very high. So for every dollar that SoFi moves up, this leap option would gain a significant amount of value. In fact, for every dollar, leap option would make about 84 cents or 85 cents. So the setup here is very clear. As you see on the screen, this is something that I would personally do right now, and the risk and return is very reasonable, and you have a lot of sensitivity on the option with a very high delta. So you can take profit really anytime you want. So if SoFi has a big short-term move, you can turn your investment into a bigger one. You're happy with that return. For me, my hurdle rate that I want to see per year is 50%. If I can get a 50% return, I'm pretty happy. Of course, I've done much bigger numbers in the past, but at this point, as my portfolio gets bigger, and as I am more selective with who I work with, and only so many people I can only sell my time to so many people and coach so many people, I am focusing on people that have 50K plus. And we're working on really scaling in a smart way. And we're oftentimes taking a little bit of the aggression down. We're saying, hey, we want to achieve these goals in this amount of time, and we're looking at more long term. So I don't really work with people that are looking at short term gains, because they're just not interesting to me. I want to build a long term relationship and work with someone on a longer term basis. So that's kind of where my strategy has shifted, and why I also like leap options. So the next stock I want to cover is going to be NVIDIA. NVIDIA is currently trading for $174 per share. In the last 1 month here, we refresh the screen. NVIDIA has had, honestly, really strong performance, and it's just clear that the stock is going to continue to run. 1 month we're flat, but then 6 months we have like the whole different story. Every single analyst has like updated raise, right? Increases, raise to $235 per share here. Another $200 per share. Well, that maintains about $220, $200. Everyone is essentially raising their price targets to $200 plus per share. And I think that if you look at the leaders in AI chips, it's NVIDIA. They power ChatGPT, Tesla, Meta, and much more. So if you look at Blackwell chips, their launch broke absolute records. They sold for 12 plus months due to crazy demand from massive tech companies. Revenue hit $46 billion in 1 quarter, with profits soaring to 59%. NVIDIA is expanding into robotics and self-driving cars further, and they have a huge target. So what I like about a leap option is I would just jump in with a leap option. Again, something very similar. I don't want this video to be too long, so I'm going to give you the short story. 150, it would be a good strike price. Of course, you can be flexible there. If you were to go to 155 or 160, there's just a little bit of a trade-off there. I'll put down in the description or at the end of this video a little bit more that you can watch about picking the right strike price, assignment risk, and all that. You don't have any assignment risk, though, when you're buying call options. You're in that full driver's seat. All right, let's go into the fourth stock. And excuse me if I'm not giving the full details here. I want to make this video short. Plus, my voice was going to probably give out pretty soon. So UNH is the fourth stock, healthcare giant, serving 50 million plus Americans through insurance and clinics. I like UNH, and I'll make a video on it soon as I recover. That healthcare is a good place to invest in. There's an aging population tailwind. So UNH will definitely be an interesting play, and they are profiting off of an aging population. So let's pull up UNH here. Of course, it's had a lot of volatility in my coaching program. A lot of people have been talking about UNH. And with Warren Buffett getting behind this stock, I think that there's a lot of strength in this company now. With Warren Buffett coming in at 245, now I think we have very strong support. I can't really see UNH falling that much lower. I only see kind of the upside for this company, especially as they're expanding into home healthcare through closing 3.3 merger deals with Amedisys. So
That company is a leading American provider of in-home healthcare services, including home health, hospice, and palliative care, basically all-around care for people with serious illnesses. So UNH is gonna, make a lot of money. It looks like. So I would look at a price target of potentially 350. So yeah, you can get into a leap option as well. A good leap option can be a 1 year out, so you can go for next May, June, or next September as well. Since we're in September now of 2025, we can go for next September of 2026 for UNH. And the last stock, and it's a really interesting one, is Okta, ticker symbol OKTA, cybersecurity leader. And I think that the company is showing very interesting signs of a good investment opportunity if you look at how much they have fallen. It's hard to say because you never know when a stock has, pullback, 6% pullback, and 6 months is pretty flat. So this is kind of like my fifth play, my least certain play, but I would look at, purchasing some leap options with the right quantities, right? Not too much of an investment in Okta, because I think the stock could have a massive increase. And if we go back to where it was sitting at over $125 per share, then of course a leap option would have a pretty massive return. So I hope you found this video helpful, and I'll catch you in the next one.